Hi there, and welcome to the 100th episode of Show Me the Crypto. We can't believe we're already at episode 100. Time has flown. It seems like yesterday that we were in December 2020 talking about launching this podcast and thinking we're going to try out a couple episodes, see how it goes. And we've loved it. It truly feels like we're just getting started. The first thing we want to say is thank you. Thank you to all of you who have watched our episodes on YouTube, who have listened to these episodes on your favorite podcast app. What we would appreciate so much if you haven't already done so, first off, make sure you're subscribed wherever it is that you consume our content. It really helps us out a lot. And the second thing we would ask is that you leave us a rating or a review, especially if you're on Apple Podcasts specifically. That really helps out. But thank you for all of the support. The second thing we want to mention is we have an awesome guest this week. It is Ben Cowen from Into the Cryptoverse. Ulf, what did you think about this episode?
Well, I've been a Ben Cowen fan for so long. I've been subscribed to his channel for years. And he's been on my wish list to get on the podcast. So speaking to him and going through across the episode, he brought up various charts and talked through his various indicators, where we are in the market, where we're going, a little history of where we've been. It was so much covered in one episode. And for me, again, as a fan, it was just tons of value. So I loved it.
Ulf and I have this wish list of guests, and Ben has been on it for a long time. So to have him be our 100th guest was such a treat, and he did an awesome job. So that episode's coming right up. You're going to love it. The final housekeeping thing to mention before we jump into this episode is that we are, in celebration of 100 episodes, launching our very first NFT collection. The best way to find out new information on this is follow us on Twitter, because we will be tweeting out more and more as it goes. But what we know is this: the launch is going to happen in mid-March. There's going to be a total supply of 200 or less. 100 of those are available for general mint. So not a big number. You're going to want to be watching our Twitter and make sure you jump on that launch when we do launch it. We'll have all official links through our Twitter. The price is going to be 0.05 ETH. So this is an affordable NFT, and we're not making any promises beyond a collectible. But if you know Ulf and I, we've always been big fans of projects that offer utility. So we'll leave it at that. You may be wondering, the 200 supply, where are the others going? 100 of those are reserved to be gifts for our first 100 guests. So we want to thank them for coming on the show. So total supply of 200 to form our first collection, our first start of the Show Me the Crypto community. So with all of that said, enjoy this conversation with Ben Cowen.
Show me the crypto. Show me the crypto! Show me the crypto!
In a world on the brink of disruption, two men will bring you clarity by interviewing some of the most intelligent and influential names in the blockchain world. Welcome to Show Me the Crypto with your hosts, Wade Patterson and Ulf Lonergan.
Well, hi there, and welcome to the 100th episode of Show Me the Crypto. My name is Wade Patterson.
And I'm Ulf Lonergan.
We're a couple of friends from Canada who love learning about cryptocurrencies and blockchain technology, and we're happy you're along for the ride. Whether you're a crypto virgin or you know your way around the block, we hope our interviews with some of the most intelligent and influential names in the blockchain space help deliver you with value. And on this episode, we're joined by Benjamin Cowen, founder of Into the Cryptoverse. Well, it's fair to say nobody knows exactly what is going to happen in the crypto markets. Our 100th guest is as good as anyone at leveraging data to provide clarity in the markets. With a background in computational mathematics and programming and a PhD in engineering, Ben first learned about Bitcoin in 2011 while taking a cryptography course in his junior year. In 2019, Ben launched his Into the Cryptoverse YouTube channel, which has 785,000 subscribers and more than 94 million views to date. Ben, welcome to the 100th episode of Show Me the Crypto.
Hey, thanks for having me, and thanks for the introduction. Make me sound much better than I probably am.
No,
way.
we're so thrilled that you're our 100th guest. We've wanted to have you on the podcast pretty much since day one, since we launched. And I want to start off by going back to 2011. So in other interviews, I've heard you talk about, unfortunately, at that time, you didn't invest in Bitcoin. That's when you learned about Bitcoin. But to play devil's advocate, how do you think your life could be different, or would it be different if you had actually invested money back then in 2011?
It's a good question. I think my path would have been very different. Part of the issue was that it's not that I didn't want to. It's just like you can't invest what you don't have, and I was just a poor college student. So it was one of those, and also at the time, it's not like it was at all remote. There wasn't really this idea in my mind that Bitcoin was going to go, from just a few dollars to $69,000 eventually. Like that wasn't really anything that crossed my mind. But yeah, I mean, admittedly, had I invested in it, I suppose that I might not have gone to, through the same path that I did. I mean, I ended up going to grad school and I ended up getting a job as a postdoc. It's kind of hard to imagine taking that same path if if I had made a timely investment in Bitcoin and then watched it go up so much. Because I mean, even in 2011 we had a pretty massive bull run, and then in 2013 we had a pretty massive bull run, and I started grad school in 2013. So I have to imagine that my life probably would have been somewhat different. I might have focused more on financial markets back then, and maybe starting to create my own content for it. But that's not, that's obviously not what happened, and it took a little while to actually get some money to invest in the market. But yeah, I have to imagine I probably would not have gone to grad school. I would not have done a postdoc, and maybe I would have been more involved in sort of the publicly anyways in the crypto community before, because I didn't launch my channel until 2019, and that was after learning some painful lessons over a couple cycles, and just thinking, hey, maybe I can try to at least help some people out with some of the lessons that I've learned. But yeah, it's a hard to know with a hypothetical. But because I'm sure so many, and the other question too is maybe I would have watched it go up and gotten really excited about it, not gone through with some of my prior plans, and then watch Bitcoin crash 95%.
Exactly.
So there's always other ways to look at it too. So maybe it's better I didn't and continued on with my path. But yeah, I mean, we know that Bitcoin can be brutal in the path that it takes, even though historically the general direction is up.
Well, it's funny because we've asked similar questions to many of our guests, and some of them who were around and did invest in 2011. I mean, it's easy to think that, well, if I had only gotten in Bitcoin, back in the early days, I'd be so rich and everything would have been different. But what we've heard a lot of the time is, even for those who actually did invest, they ended up getting out. And so even though they invested, it doesn't mean they were in it for the long haul, because back then, I mean, there were still huge movements, but there wasn't as much maybe conviction from a lot of people that this is going to stick around. So yeah, right. I mean, who knows, right? Maybe it still wouldn't have been as life-changing as one might predict.
Well, the other point too is, even if I had put money in, it would have been a relatively small amount. That I mean, like if you put $100 in and it goes up 100x, like it's good money, but it's not going to like change your life type of money. So that, it's always a good point.
So what about between that 2011 and 2019, we got many years in there. Can you maybe get into more detail about everything that did transpire personally and professionally, leading from that time you discovered Bitcoin to when you launched into the Cryptoverse?
Sure. Yeah. So 2011, that was right around that was my junior year in college. And that was also so I did an internship at NASA Johnson Space Center that spring. So I was a bit more preoccupied with that than investing money. And I was just focused on trying to, work up my resume to get into grad school. But I was still interested in crypto, and honestly, cryptography was an elective. It was my undergrad was in mathematics, minor in physics, and cryptography was an elective. It's not a class I had to take, but I wanted to take it because I thought it was interesting, and so that was what really piqued my interest in crypto, in the crypto. And it's funny because crypto back then too didn't necessarily mean like cryptocurrency. Like it can also mean other, just cryptography. As well. But yeah, so then you get into 2013. I went to grad school for nuclear engineering. I started off with a master's in it, and we watched the markets. I mean, we very close watching Bitcoin. I remember watching it with a fellow grad student back in 2013, and we were like freaking out as it was plummeting down. This was after the second peak. So I don't know if you're the 2013 double peak cycle. We had one massive blow off top, and I think everyone thought it was done. And I thought it was too. And then another crazy move to the upside. And, I watched how quickly, wealth can come and go. And you always think this time is different and it's going to just keep going up forever. And then it ultimately came back down. So, I just continued doing what I was doing. I mean, I was in grad school. My PhD again was in nuclear engineering. So I did a master's first, and then I continued on with a PhD. And then as we got onto the next cycle, so we had the next cycle, by 2014 and really into 2015, I still wasn't really that convinced that it was still going to keep going up, because you think about these bubbles that form, and we all look back at it in hindsight now, and it seems so obvious. But in 2014, I would say by 2015, right? Because in 2014, I was still somewhat optimistic because I'm like, all right, well, it's a bear market. It's not going to last forever. But then in 2015, it wasn't like 2019. We basically just scraped the lows for a year. And it was brutal. We put in a low in January, and then we then came and put in another low. On some exchanges it was slightly lower, on some it was slightly higher. It was more or less double bottom by August of 2015. And I just was like, how long is this thing going to go on for, where the price is trending down? Because it seems like it should go up. I mean, it seems like such a great technology. So why is it not going up? Yeah. So again, I wasn't super convinced, but I still was interested. I mean, I still was interested in crypto and navigating it, even though I'd been burned on it. And that was also when Ethereum was introduced. And, I remember watching Ethereum go up to like $14, and then it kind of scared me because then it like had a pretty quick pullback to like 50% pullback down to like $7. And I thought, all right, so much for that. And then it went up to $1,400. So, during this whole time, I mean, it was crazy to watch, but I just continued on doing the grad school stuff because I didn't know I didn't know really what my future was going to be. And I certainly didn't think that anyone cared what I had to say about crypto. I was looking at crypto YouTube back then. Crypto Twitter didn't even really exist. I mean, not many people talked about it. A few people, but not very many. Crypto YouTube, there were some larger channels that really started to explode in the 2016, 2017 bull market. And, one of the things that I noticed is that it was hard. I felt like it was hard to find content that was unbiased, I guess. And I even struggle. I mean, I struggle with that myself even today. It can be hard not making content that isn't biased in some manner, because I'm always going to be somewhat biased according to my own view of what's going to happen. And so it's hard to show it from a different perspective sometimes. So I figured, hey, I would create a channel and talk about crypto. But this was after I graduated. So I was like, I really want to create a channel. I really want to talk about crypto. But I knew that if I started one before I graduated, I would probably be hard pressed to finish my dissertation. I was like, how can I do both? Because as you guys know, I mean, this is a quite time-consuming job, to put out regular content and engage with the community, and then also, to basically have a full-time job doing a graduate degree. So I waited until after 2018, and then I was going to start one, and then I started a postdoc, and I was like, well, I can't start a YouTube channel now because now I have to focus on my postdoc. So I waited. I waited till after about a year after. So 1 year after my postdoc started, and I felt fairly comfortable with my work, and I didn't have to burn the candle on both ends, just trying to keep up with with the work I was trying to get done. I then decided to start a YouTube channel in mid 2019. But not a lot of people know this, and I don't know, maybe it's the first time I said it. But in mid 2019, I didn't start my channel talking about Bitcoin and Ethereum. That was not what I started. And one of the reasons is because I was told by someone that everyone already spoke about that and no one cared about, the market was already saturated with content about Bitcoin and Ethereum. So I ended up talking about other stuff, other cryptocurrencies, smaller market cap cryptocurrency projects that you won't find on my channel anymore. Just because I don't want to promote small market cap projects at this point. I just feel like it could lead people to making certain assumptions about me. And I feel like, as with a larger channel now, I have different responsibilities than I did back then. So yeah, and then I switched over. I switched over to talking about Ethereum and Bitcoin in Q3 of 2019 because I was like, all right, this seems like a good time to get into the market. Ethereum's Bitcoin value, the Ether Bitcoin valuation was at like 0.017, and that was the first real video that I did on my channel where I was like, all right, guys, this is severely undervalued and it's likely going to go up a lot. Bitcoin's likely going to go up a lot. This is the time to get in. And then the rest is history. We continued down a little bit in 2019, surged back up in early 2020, and then what happened in March. The floor, basically everyone got rugged essentially, and it actually created a really nice opportunity, I think, for people who had missed the December 2018 bottom. It gave them a second chance. One thing we know about crypto after a bear market and an accumulation phase, it often gives us more than one opportunity to get in, right? So you don't really have an excuse if you just fail to pull the trigger at any point. Look at 2015. You had the entire year to get into the market and really two tests of the low. 2018 we had a low. 2020 we had a slightly higher low, but some cryptocurrencies actually put in a lower low in 2020. A lot of the altcoins actually went quite a bit lower. So, and then once I started talking about Bitcoin and Ethereum, my channel started to pick up pace a little bit. And then we had 2020 with the drop. And, I don't think anyone knew what was going to happen after that. It took everyone by surprise. And then after that, the Fed just printed, $6 trillion. And everything went up. And it was hard not to make money in late 2020 and early 2021. Like you could throw a dart at a board with any coin on it and probably would have made money back then. But yeah, that's essentially my story. And I ended up quitting my job in January of 2021, actually. So I waited until January 2021. I wanted to be sure that, because I'd spent my entire life to get this job. I'd recently been converted from a postdoc to a staff scientist at the lab I was working at. And so it was a very difficult decision to give up that job because I just spent the last decade of my life studying to get this job. But yeah, I just realized that, doing this was a full-time job and I could not do both in an effective manner. I had to give up one. So I ended up giving up that job and I haven't regretted it at all. There are times, of course, where, the trolls come out and I'm like, is this really what I signed up for? But then, usually the things get better slowly and we go into another phase of the cycle.
I'm trying to think back to 2019 and figure out what smaller altcoins you would have been focused on at that time. Trying to do the math, but are those secret vaulted away, or can you share that with us?
Yeah, so some of them I'm not gonna say because they've gone into the sort of the depths of the cryptoverse, never to be heard from again. But one of them actually you might have heard of. So one of the ones that I made a few videos on way back was a coin called Phantom. And this was when it was trading. It was very low market cap back then. It wasn't anywhere close to what it is today. Look at I don't even remember what the price of it was in 2019, but it was very low. Let me take a look here. Yeah, it was at like 0.003, like not even a penny.
Crazy.
Wow.
Yeah, so like I made a couple videos on that one and a couple videos on a few other ones. And then I was just like, you know what? Like, while these are all fun to speculate on, privately, I don't really know that I want my public reputation tied to, these micro caps. And I mean, Phantom today is not even really much. It's not as much of a micro cap as it was back then. But I wasn't really wanting to go that direction. So, yeah, I mean, there was, and it wasn't like a lot. It was basically just like that summer, like June. I started the channel in June, made a couple videos like June, July, August, and then September was when I just started talking about like Ethereum and Bitcoin and even some other ones like XRP. You'll find those you'll find those videos on my channel as well. Litecoin was one I talked more about back then as well.
So you launch in June, and at that point, what are your expectations? Because you obviously know that this is going to take work, it's going to take time to do it well, but 2019 till now is not that long of a time, and you're approaching 1 million subscribers, like almost at 800,000. What were your expectations like in June? Was it just, I'm going to help a few people so they don't fall into the same bull market, bear market traps that I've experienced, or did you ever envision it could get to this level?
No, I never thought I would get to this level, and I wasn't even looking at it when I first started. It was sort of like, all right, I want to make some content to help some people, but in my mind, some people was like 100 people. It wasn't a lot. I mean, it was just like, I just want to be able to talk to a few people and provide my outlook, and then by September, I kind of recognized that it was time to give the blue chips more, just more airtime, just talk about them more. Because one thing I go back to is if we have a bull market, we know Bitcoin and Ethereum did well. But there are times where Bitcoin does well, where the rest of the market doesn't necessarily do well. And their altcoin Bitcoin valuations can go down. And so, yeah, I mean, like I started off and I only made like 1 or 2 videos a week for a few months. And I would even though I would only make like one, even though I would only put out 1 or 2 videos a week, I would like pre-record them. I would like, because the market didn't move. I mean, you could literally go to, another coin I talked about was Nano. I don't know if you guys know that.
Yep.
Mm-hmm.
But it was back when it was, I first started following it more. It was the Ryblocks or whatever on, way back in the day. I mean, this was way back in the day. But yeah, so I essentially just made a few videos on these these different altcoins, and I would make them and then literally just schedule them out for like 3 weeks in advance, because the market wasn't moving and no one knew, like the price didn't move from like 1 month to another. So I could just make a video, do it all in like one night and then just set them to release over a long period of time. And, it took me about 6 months to go from 0 subscribers to 500 subscribers. It took about 6 months because, I mean, no one cared about what I had to say. There were plenty of other YouTube channels that had much larger followings than me. And so, I'm just some new schmuck on the block who thinks he's smart. But yeah, I mean, and then I started talking about Bitcoin and Ethereum, and I think because there was much more of an audience for those cryptocurrencies, that was why my channel took off. It was because like I was doing the same type of stuff that I do with Bitcoin and Ethereum, but I was just doing it on altcoins, and it's just like no one cared. That was the thing, that just no one cared, because now people love altcoins, right? But in 2019, I mean, altcoins they were dead for the most part. I mean, again, like the price would just go sideways for a year with a slightly bearish bias. And so, yeah, I mean, and then in October, so after my channel had been around for 5 months or so, I made a video on Ethereum and Bitcoin, and then it took me like 5 or 6 months to get to 500 subscribers. And then by that Christmas, by December, or actually on December 31st of that year, I hit 10,000 subscribers. So I got like 9,000 subscribers in like 2 months.
Wow.
And then it just continued to slowly grow. Like throughout 2020, I slowly got to 20,000 and then 30,000. But then by 2021, I mean, at one point, I was getting 100,000 subscribers in a month, just because, I mean, it's a bubble, right? And everyone joins in. So, that was kind of where I was. And then by 2021, I was like, all right, yeah, I guess this is my full-time job now.
Yeah.
For those who have been listening to your channel for a number of years, like myself, they might remember back in the day, I can't remember exactly when I started following you, but I think it was probably around that time, like the maybe winter of 2020 coming around kind of thing. And so your channel was still probably relatively new, but when things were maybe starting to pick up. And I remember in the comments, it was kind of funny because your channel was obviously growing fast. It was getting good attention. And you could see when you kind of know when like a real community is starting to build, because people in the comment section start bantering and talking about things that are maybe they see in, it's like commonalities throughout your videos. And one of the things that sticks out to me that I recall is you had, and no hate, but you had a terrible webcam. It was either your webcam or your audio. It was so bad, but it was kind of, oh yeah, it was both. It was both. Okay. Yeah. But it was so funny because your content was so good. It didn't matter. Like everybody loved you walking through the charts, and it was a point of view that I don't think you really found on other channels. And that's probably part of your success. But the comments were always hilarious because it was like, just taking jabs at like, when's this guy gonna upgrade his webcam and all this stuff.
The funny thing, even today, like the camera that I'm using, this is my internal camera on my laptop.
Yeah.
This is my MacBook Pro camera, and the microphone is the internal mic on the laptop. So like the only reason it sounds better, I think, than it did back then is because like I upgraded to a newer laptop, and because like my laptop that I was using was like 5 years old or something.
Yeah.
But now I have like a new laptop, and I actually did get a mic that I used for a little while. It's actually this one here, but I don't even use it. It's not even plugged in. Like I don't even use it. So I just use the internal one on this MacBook Pro, and I mean, like it's great, right? I mean, I'm not here to pump up Apple, but I mean, like it's for a $1,500 laptop, the ability to just make videos and have an internal mic that is at least usable and doesn't get me as much flack in the comments as it did back then.
Well, it's come a long way for sure. But I was gonna lead into, how have things changed aside from a better laptop, going from that time when you started till now, just in terms of how your content's evolved, and maybe obviously we talked about you talking more about some altcoins in the very beginning, but aside from just the assets you were analyzing, how has your content evolved and the way you approach your material?
I would say I'd like to think it's a bit more professional. Back then, I also, if you listen to my videos back then, I did not speak with much confidence because I was still, I mean, even after living through the last couple of cycles, you still don't know what's going to happen. And we still don't know what's going to happen. I mean, we think we know, but we don't know. I mean, no one really knows what's going to happen. So I think that was one thing, trying to speak with a bit more confidence in what I thought, and also, trying to admit when I'm wrong about things, which does happen quite frequently. I think when you start off, your reputation is constantly on the line for trying to get things right. But by this point, I've gotten enough things right and enough things wrong to know that it's just going to keep being like that. I mean, I'm going to get some things right, I'm going to get some things wrong, and try not to dwell on it too much. It's just the nature of the game that we play. And then I think another thing is I think I'm more risk averse than I was back then. I mean, not just in not talking about altcoins, because I think a lot of people think that I just never I'm not interested in altcoins. It's not true. Like, just because I don't talk about them doesn't mean I don't have them. But I would say I'm more risk averse than I was back then. So like back then, myself personally, I was more so in like wealth creation mode, like just trying to create wealth. But after you've gone through a couple bull markets and really, like, I'd say I mean, so the first cycle gets you completely wrecked, right? You basically lose all your money because you think at this time is different. The second cycle you go through, I think you're able to make some good decisions, right? You're able to take some profits, especially if you stuck around through the bear market and the accumulation phase, just because you know how hard it was and you know those times are going to return eventually. And so the third cycle, you get a bit better at it, and like in this last cycle, it kind of still, I mean, it still took me off guard a little bit. Like the parabolic rally happened, sooner than I thought it was going to. But as I say, never let a good bubble go to waste. You don't know when they're going to occur. So when they do occur, you want to sell into them. So we had that rally into March and April, and I offloaded most of my crypto, and it was really difficult because this was still back when the 100K narrative was really hot, and not even the 100K narrative, but the 300K narrative was really hot, and that was difficult. And I remember thinking like, I'm gonna get left behind. Like here I am selling all my crypto, and Bitcoin's not even 100K yet. And then we had the summer lull right in 2021, and I started to accumulate again. And then, I mean, if I'm being completely honest, right, the secondary peak I did not get. I got the first one, but the second one really took me by surprise, and it took me until January to really recognize it. And I would say a lot of those things have just sort of made me more risk averse than I used to be. And but I would encourage people to not necessarily follow I think we all have a different path to take. Investing is very much a personal journey. What's right for you is probably not what's right for me, and what's right for me is not going to be what's right for someone who is maybe like about to retire because they're not going to take on as much risk as I am. So I would say my content has evolved somewhat in a manner that is suiting my own personal direction, which is being more risk averse and trying to focus more on what is the downside risk rather than just not focusing on it. I think back to March of 2020. I mean, I don't really feel like a lot of people were focused too much on the downside risk because we had a lot of things that had flashed, right? Like the hash ribbons had flashed. We had already had our December low, and from 2018, and so I try to focus a bit more on the downside risk, just because I think it's easy to see your portfolio go up at various phases. What's harder is keeping those gains, and that's why you have to constantly consider like, what is the downside risk? Maybe I should take some off the table in case some of these altcoins go down. I mean, this is not like the S&P 500, where it generally trends up with time, right? Like Bitcoin trends up with time, and hopefully Ethereum and some altcoins, but a lot of altcoins don't. I mean, they kind of have one hurrah and that's it. And you can spend 5 years waiting for them to hit all new all-time highs, but most of them are not going to. So you have to recognize that, and you have to. And so for me personally, I've become more risk averse, and some things haven't changed. Like my thumbnails haven't changed at all. I mean, I still just go into something like PowerPoint or something and just throw something together. Because I think it's not as important to spend too much time on that. But yeah, I mean, that's probably my answer.
One of the coolest things about having you, Ben, for our 100th guest is that we get to kind of take a step back and look at like where we are right now in terms of the actual markets. And it's an interesting time. We're recording this in mid-February to late February. It's going to be released February 27th. But just in terms of what we've been seeing, like where are we right now? Obviously, bear market was kind of the feel of the answer, but recently we've had kind of a little bit of an upswing. So kind of from the 1,000-foot level, 10,000-foot level, where are we right now in terms of the markets?
Yeah, sure. So let me share my screen. All right. Can you see my screen? Yeah. So this is like this is an interesting indicator that I have, and it's basically like a total indicator risk for Bitcoin. And there's a lot of different risk metrics you can find out there. Some are based on, like the extension from the 200-week moving average. I know some people look at that as where we are in terms of the cycle, but this cycle has showed us that we can go well below the 200-week moving average, and doesn't necessarily mean anything. And so this risk metric, what it does is it takes into account three different things: price metrics, on-chain metrics, and social metrics. And the point is to say, I don't know what the most important one is. We could look at any metric, and if you go back to June of 2022, a lot of people thought that was the bottom, right? 17.5 seemed like a decent bottom for a lot of people, but it was very similar to what we saw in 2018, where we saw a bottom in June, and then we had another lower low in November. And my speculation for this cycle, and I said this back in the summer, was that I don't think June's the bottom, but I think the next low could be, worst case scenario, it would be a low after that. Is sort of the worst case scenario that I can imagine. Because from a time-based perspective, I mean, Bitcoin's gone through a pretty typical bear market. If you think back to 2014, 2015, so the 2014 bear market was from November to January. 2018 was December to December. And then 2022 was arguably from November to November of 2021 to November of 2022. So from a time-based perspective, in terms of the bear market, it seems like it could be close to running its course. I think the main reason to even put any consideration towards a potential lower low eventually, or a worst case outcome, is we've never, Bitcoin's never really experienced a recession before. And I'm in the camp that we're not in a recession. Like, we haven't been in a recession. And I know you can look at 2 consecutive quarters of negative GDP back in the first half of 2022 and say that was when we were in a recession. But I mean, historically, recessions occur when you see the economy really break down and you see the unemployment rate go up. And we haven't seen that. I mean, the job market, the labor market has remained secularly tight. I mean, we just put in a new secular low on the unemployment rate at 3.4% for this business cycle. So I think the main risk we run is just the Federal Reserve is sort of where we are right now. From a crypto perspective, what normally needs to get washed out, I think most of it has been washed out. You had FTX, you had Luna, Celsius, BlockFi, Voyager, Genesis. I mean, a lot of these things have come to pass. And in the grand scheme of things, when you think about how significant the meltdown was by FTX, and we only put in a low of around $2,000 lower, what it shows, I think, is that the contagion events have mostly run their course, if not entirely run their course. Now, if another major exchange were to go down, I don't think it would be fun. I mean, I think we would go back down quite quickly and retest some of these levels. But the main risk, I think, to crypto right now, because we always have to consider what it is probably just, does the Federal Reserve push us into a recession? In the context of history, it's basically always been the Federal Reserve pushing us into a recession by tightening having monetary policy that just pushes us there. And the reason we're more likely to experience something like that this time is because inflation is something that they're fighting. Under most circumstances, they would have pivoted like 8 months ago. The first sign of anything going bad, they just pivot. So when I look at this metric, the purpose was to try to identify, what is the risk in the market at any given time. And so the whole idea is that essentially it goes from 0 to 1, and 0 historically low risk, 1 is historically high risk. And it includes 3 different things: price, on-chain, and social risk. The price risk is made up of a risk metric specifically for Bitcoin based on its own volatility. The total market cap risk, logarithmic regression model for Bitcoin, logarithmic regression model for the total cryptocurrency market cap, which is actually this chart right here. So that's included in it as well. It's also made up of a corridor that I created. The fear and greed index, a lot of people know what the fear and greed index is, so that also goes into this. And then the on-chain stuff is the MVRV score, which I think a lot of people are familiar with. The Peel multiple, the MVRV score, the miner cap to thermocap ratio, transaction fees, the market cap to thermocap ratio, the terminal price. And then the social statistics that go into this are subscribers to YouTube channels, like new subscribers. So I track not only new subscribers to my channel, but also subscribers to other channels as well, and just kind of see what's happening. And right now, we're not really seeing a whole lot of growth. I mean, there's just not a lot of new people coming into crypto right now, which is very similar to 2019 and very similar to 2015. It's just a fairly boring year. Yes, we've had a 60% pump in Bitcoin, but no, we had a 4x move in Bitcoin in 2019, and we still ended up coming back down, in the latter part of the year. So you combine all of these into a single risk metric, and this is what you get. So what does it show us? What does it show us, I guess, is the question. Well, I mean, it shows us that we've been at some pretty low risk levels. And in the grand scheme of things, 0.252 risk is relatively low. It's not the lowest it's ever gone, and it's not the lowest that it could go, but it is a relatively low level. And the lowest we've gone so far this cycle is around 0.117 risk. Now, this is if you include all three components, the price, the on-chain, and the social component. So the one thing I'd point out, though, if you remove the social risk from it, right? And by the way, the social risk also includes YouTube views to crypto channels, followers to popular cryptocurrency analysts on Twitter, followers to cryptocurrency exchanges on Twitter, and followers to layer ones on Twitter. So it includes all these things. If you turn the social risk off completely, you can see that the risk level went lower. So if we ignore that component completely, it went lower. It still hasn't gone as low as it has in prior cycles, but it got really close. It got really close back in back in the November, December timeframe. So you could argue that there has been a lot of pain felt. And again, from a macro perspective, I don't think anyone who bought Bitcoin at 15K is going to be feeling that much pain. Even, I mean, right now, of course, they're not. But 2 years from now, I think they're going to be doing quite well. Is frankly my opinion. I think the only risk is, does the Fed push us into a recession? And I don't know the answer to that question. I mean, there's a lot of discussion about whether we're going to have a soft landing or a hard landing. We know that the Fed's not normally that great at achieving a soft landing, even though it has occurred, I think, a couple times. So I think that's where we are right now. I mean, we're basically in a choppy year where I think both sides are going to get wrecked. I think the bulls are going to get wrecked and the bears are getting wrecked. And the bears are getting wrecked right now, right? And that's the truth, right? The bears have been getting wrecked for essentially the last 2 months. And what history shows us is that the year after, the year after 2014, and which was 2015, and 2019, and then 2023, my guess is that we're going to spend about half the year getting the bears wrecked and half the year getting the bulls wrecked. And I think it accomplishes something. Because in 2014, 2018, and 2022, it was basically just down only. It was just more or less just slowly going down. But in the years following that, we tend to just sort of chop people up, like their portfolios, because people who were bearish back in November or December because they were hoping for a recession right away, they're completely wrecked, right? And people who might be in that camp, who then FOMO in at a new local high, could then just spend the next several months watching us go back down. And so I think what we're likely going to see is just a lot of choppy price action for the rest of this year, where we could go a bit higher, but I also think it's possible we go lower, a bit lower as well. And we just sort of chop everyone's portfolios up for the entirety of the year. And then once we get into 2024, and I think we're likely going to see things really take a more sustained, directional shift where we actually start to trend higher and can actually start talking about 40K again and 50K again. And I know some people are optimistic that we're going to see those prices this year, but history shows us that the S&P doesn't tend to bottom until after the Fed pivots, or at least around the Fed pivot during high inflation. And we haven't seen that yet, right? Like the Fed hasn't pivoted yet. So it might be too premature to sort of put on our rally caps to new all-time highs. But I would say, this year, I think is going to test both sides. It's going to test the bears. It's going to test the bulls. And then as we get out to next year, we can kind of see things aligning again, right? The Fed will pivot. We're going to have another Bitcoin halving. And hopefully, we'll be going back into a period of quantitative easing where we will just slowly start to trend back up. And I can continue on, but I'll just pause there to see if you guys have any questions.
Sure. No, I've always been a fan of your risk analysis. I think one of the things that I loved when I started following your channel was your risk metric and your how you would talk about DCAing into your investment with the support of the risk metric as a way to sort of adjust how much you're DCAing in. And that was always seemed like such a logical approach to DCAing it rather than just putting the same amount in at all times. Why not do it with a little bit more strategy to it? And looking at this chart, I think it's amazing, the tool you've built. So what I'd like to kind of move into is maybe you can show us a few more of just like what are your favorite charts and indicators to look at to help you in assessing the market, or what do you even just enjoy talking about and sharing with your audience the most? And maybe you can just talk and show us through a few of these.
Yeah, and you're right. I mean, the DCA approach is I think the best approach. We can people squabble for forever about trying to call the bottom to the day, but the truth is that a DCA approach is right. And I think a dynamic DCA, as you said, where you put in, you try to weight them more towards the lower risk levels, right? And that is one of the things. Like if you think about DCAing, if you DCA'd even starting in June, right? Even though we ended up going lower, you're still doing well now. And the other side of it is if you never DCA and you're just sitting in 100% cash, then what happens when we get moments like this? Do those people then buy the new local top because they didn't DCA in at lower prices? Or do they just sit and wait and hope the price comes back down? Which, I mean, I do think we will see some moves back to the downside this year, but it's very painful if you're in 100% cash to sort of experience that. And so, one of the things I'd like to mention though is I'm very much in the mindset of Bitcoin is sort of, I think, should be the focus right now, not the altcoin market, mainly because it's probably one of my more polarizing views on my channel, is the dominance of Bitcoin, I think, is a very important metric on helping us understand the health of the altcoin market. So this is the dominance when you include stablecoins. Or sorry. This is the dominance when you include stablecoins. And you can see that it had been moving slightly lower for a while. And a lot of people we're still seeing altcoins pop and whatnot. But my sort of thesis is that Bitcoin makes by far the most amount of sense until you see the dominance at a much higher level. Think about, this alt season over here. So this was when the dominance was, back at 85% in February 2017. And we saw it drop off a cliff, down to 43%. And then over here, we saw the dominance drop from 70% down to, less than 40%. But everyone, a lot of people are interested in alt season. Look, you can see altcoins go up, even in a bear market. We had plenty of bear market rallies in altcoins, and we had plenty in 2018 and plenty in 2019, and still some put in new lows in 2020. So if you're just an altcoin holder, you sort of just slowly saw your portfolio go down and down and down until finally the Fed got to a period of a lot of quantitative easing where they just printed a lot of money. But when you remove stablecoins from this metric, this is what the chart looks like. And just to sort of go back and forth, what it shows you is that the dominance of Bitcoin has been going up and putting in higher lows since May of 2021. So this is excluding the stablecoin market. So are there a few altcoins that have outperformed Bitcoin during the bear market or have at least kept pace with it? Definitely. Matic is a good example of that, where it's actually right now, I think it's right up at its range high that it's been at. And I don't remember exactly what it was, but it has basically just been range bound. And right now it's near the range high. But a lot of the altcoin market has just been bleeding back to Bitcoin. Look at the Solana Bitcoin valuation, look at the ADA Bitcoin valuation, the DOT Bitcoin valuation, the Avalanche Bitcoin valuation, and we could go on and on and on. I mean, most of these, not only are they down 90% or 80% on their USD pairs, they're down 50 or 60% on their Bitcoin pairs. And what it shows me when I look at this chart is I think the dominance is really building out a base. And so the reason I look at this, because I think about what type of risk do I want to take on in the market? Is it, I know crypto is risky, and I see what the Federal Reserve is doing. I see the yield curves inverted. Do I really want to put a lot of my money in the altcoin market when I think Bitcoin will outperform? And this is not to say that every altcoin has to put in a new low. The truth of the matter is that some of them won't. I mean, some of them have, there's already, I'm sure, some of them that have bottomed on their USD pairs. But the thing is that just because they bottomed their USD pairs does not mean they've bottomed on their Bitcoin pairs. And so if we think about this from like a risk-adjusted returns point of view, and we go, we look at something like modern portfolio theory, which is, more of a traditional thing that people have used. This is a Monte Carlo simulation of portfolios consisting of Bitcoin and Ethereum since 2015. And the whole idea is to figure out, what portfolio maximizes my risk-adjusted returns and which one minimizes my volatility. And you can see, the Sharpe ratio is maximized right now at 65% Bitcoin portfolio, 35% ETH. Or sorry, this is the one that maximizes Sortino ratio, which does not punish positive volatility. But again, 67% Bitcoin, 33% ETH. Now, I'm actually much heavier in Bitcoin than this. If you look at the portfolio that minimizes your volatility, it's actually 93% Bitcoin and 7% ETH. And the way this works is you essentially have an expected return versus your volatility. And you could think about volatility as the risk that you're taking on. And so the way you read this chart is you say, all right, well, let's imagine my portfolio is 65% Bitcoin and 35% ETH. It's not, but let's just imagine it is. Then my expected annual return, just based on what has historically happened in the market, is 65% annually, plus or minus about 80%. So my expected annual return could be anywhere from like negative 20% up to like 150% or something. And it's likely going to fall within those bounds to within one standard deviation or a 68% probability. The reason this is important is because if you want to take on more risk, which there's nothing necessarily wrong with that, right? If you want to take on more risk, you go higher up the curve, right? Higher up the efficient frontier. You go to a higher expected return at the expense of more volatility. So you're paying for that return with more units of risk. And there's always a chance that it burns you in the end and you end up seeing a huge drawdown just because you took on too much risk. But as you go up the curve, as you go up the efficient frontier, you'll notice that the percentage going to Ethereum is higher and going to Bitcoin is lower. And all the way at the top over here, it's like, 1% Bitcoin or 0% Bitcoin and 100% ETH. But at the bottom down here, it's mostly Bitcoin and less Ethereum. So again, this really shows you that there's not a right answer to, what your portfolio should be. It's more so, what is the risk that you're willing to take on? And I couple this chart with the Bitcoin dominance. And to me, if I'm convinced that the dominance is going to head higher, and I'm also fairly risk averse, and I don't want to take on a lot of risk, it would make sense for me personally to be more focused on having a Bitcoin heavy crypto portfolio rather than like say an altcoin heavy crypto portfolio. And I don't really consider Ethereum at all. I mean, I do consider it a blue chip, and I think it's actually going to do quite well next cycle. I just think that we're sort of at a phase right now where I'm still of the opinion that Bitcoin is a safer play, and it's more so worth the risk than the altcoin market. And if you made me choose a second one, then I would choose Ethereum. I mean, I would just simply choose the blue chips. If you add altcoins into the mix, your risk is going to go way up. Like it just simply goes way up. And again, you couple a chart like this with a chart where you're looking at the Bitcoin dominance and not including stable coins, and say take a moving average of this. It sort of just looks like the dominance to me is building out a really large base to go much higher. And I think this is going to be on a number of different things. I mean, I think altcoins will bleed back to Bitcoin. But remember, the dominance can go higher in two scenarios, right? The dominance can go higher because Bitcoin's just going up quicker than the altcoin market. And that's basically what's happened for the last 2 months. The dominance has gone higher, not because Bitcoin's going down, but because Bitcoin's going up, and the rest of the market a lot of the market can't keep up. And then what happens when Bitcoin goes back down? At this stage of the cycle, like when you're, in sort of the year after the main bear market year, but the year before the halving year, the altcoins still tend to sort of give those gains back to Bitcoin. And so that's kind of where I stand. And these are probably the two most important, two of the more important charts to me. The other one you could look at is, and I can pause for a minute if you want me to take a breather.
No, keep rolling.
All right, so yeah, this chart here is the total market cap of crypto, and this really shows you that we go through periods of undervaluation and overvaluation, and right now it's just a period of undervaluation. No matter how you slice it, no matter how we draw the lines, I think we could argue that, given under sort of the macro scale, crypto is undervalued. But history shows us that we can stay undervalued for years at a time. And so I kind of think that we're likely going to just stay between sort of the red line, which is like the fair value, and the lower green line, probably for the rest of this year. It's possible we can poke our head above the red line like we did in 2019. It's also possible it just plays out like 2015 and we just sort of drag our feet in this area for a while, and then we're able to sort of muster up the courage to make a run to much higher prices once we get to a period of quantitative easing. And I think that we could argue that the halving is a great narrative for Bitcoin, but it's not the only thing. Supply-based models are not the only way to model Bitcoin. I think you also have to couple it with cheap money, like access to cheap capital, and you could even make the argument that Bitcoin is a measure of excess liquidity in our system, and altcoins more so. That they're just measures of excess liquidity because they're very speculative, and 99.9% of them actually provide no real utility. But there are some that I think do. And those are going to be the projects that will likely come back, put in new all-time highs, and I think utility is going to really be the narrative for future bull markets. I think we've had a decade of pure speculation, but I think it's time that we really start to develop things that can make a difference, and people can actually see the value in, and that I think is what will drive future adoption. Look at the dot-com bubble, and I mean this is something that I've talked about a few times before. But if you look at the dot-com bubble, say the Nasdaq, and you look at what it did in the dot-com crash, you could argue that we're in a similar thing, right? We had the dot-com bull when the dot-com stocks took over the Super Bowl. What did we have last year in 2022, right? We had the crypto bull where crypto stocks took over. And there are some similarities, and that's why you have to consider the downside risk, right? Like the Nasdaq dropped 77% back in 2000, 2001. And guess what happened after that drop? It had a 60% rally, right? And guess where that 60% rally ended? It ended at its 50-week moving average, right? So you had a 77% drop followed by a 60% rally to the 50-week. And I mean, it's not to say that it has to play out in the same way, because it doesn't. But if you look at Bitcoin, what has happened, since 2022, right? It had a 77% drawdown followed by a 60% rally to its 50-week moving average. So I think this is the main downside risk. Is this our .com? Is this what we're experiencing right now? And I don't know. I mean, again, from a time-based perspective, you could argue the bear market has played its hand. But what we experienced with the Nasdaq back in 2000s corresponded with a recession as well. And so the question is this going to also correspond to a recession? And if it does, then it means that this rally doesn't have much more room to go. I mean, could it go a bit higher? For sure. But I think this is my the main thing to consider, I think, for the downside risk is it playing out in the same way that the dot-com crash played out, where you saw that 77% drawdown, you saw a 60% rally back to the 50-week, only for us to come back down and put in a slightly new low. You should note, though, that even though the Nasdaq went lower, it didn't go that much lower, right? So I don't think people should just look at this and say well, because of this, it makes sense to do something specific. I mean, if you bought Bitcoin at 15K and you're looking at the dot-com crash, I mean, it did go lower, but I mean, it didn't go. I mean, it was 30%, not even 30% lower, right? So I don't know if it's worth losing all your sleep over if it's going to happen or not, but it is a potential outcome that we should consider. And I think it's at least worth our attention to sort of consider, will we get a recession? Will we not? And if we don't get a recession, if the Fed avoids a hard landing, then you could argue the lows are in, right? If we get a soft landing. If If we don't, and we get a hard landing, which historically is more likely to happen, then there could be more downside. So where I am right now with Bitcoin is, I look at all these models that I just showed you, and I think there's been a lot of great opportunities to sort of dynamically dollar cost average into the market. I think there's going to be plenty more opportunities this year, whether we put in new lows or not. Whether we come back down and scrape the prior low like 2015, whether it's a higher low like 2020, or whether it's a lower low like the dot-com crash. I still think that 2023 is likely going to be remembered as just an accumulation year. And by the time we're out in 2024 and 2025, it's not going to matter is the truth, right? I don't think these prices are going to really matter too much when we're out in 2024, 2025. I think we're just going to look at it and sort of laugh at how much we bickered over whether 15K was the bottom, or if we're going to go to 12K or 13K or whatever. It doesn't really matter in the end. It matters to people that are 100% cash. And I'll be honest. I mean, I do have a really large cash position right now in the hopes that I will get more opportunities. But also the altcoin market. I think after we sort of see the altcoin, the finalization of the altcoin reckoning on their Bitcoin pairs, I think that will be the time. I think after that will be the time. And if you look at alt Bitcoin pairs, they tend to bottom. In the last cycle, a lot of them bottomed in the third quarter of 2019. So, if you just want to look at this 4 years, whether the bottom's in or not for Bitcoin, still a good chance alts are going to bleed against Bitcoin for a couple more quarters, out until the third quarter of this year, and then hopefully from then I can just sort of put on my rally cap and say, all right, it's time to go back up in a sustained way. And I think the biggest, if I had to, sort of think about this, I think the biggest risk to not having a position is, what happens if we just rally, what happens if we just rally now, to 30K or 40K or something. And then people could really start to feel like they get left behind. So I think that's the reason why it's always worthwhile to have a position in Bitcoin, because you don't know. I mean, you simply don't know what's going to happen. And I think Bitcoin is considered a risk-on asset, but at some point it might prove to us that it's a risk-off asset. And I don't know if that's this cycle. I don't know if it's going to be next cycle or the one after that. But this is essentially where we are. And maybe the last the last chart to take a look at is sort of the risk chart, but looking at it like where it's color coded rather than just sort of the line. So you look at the color coded risk metric. This is what it looks like. So, and this includes the social risk, the price risk, the on-chain risk. And I mean, you can see like this first peak, that's what I sold into. And then this sort of the summer lull of 2021, I reaccumulated. And then over here, it took me until January to recognize, all right, like we're done. And it really sucked. And it really took me a long time to come to terms with it. But I sold off most of my altcoins that I had reaccumulated back in the first quarter of 2022. And I've just been sort of sitting idly by, waiting to jump on the altcoin bandwagon again. And I know I've missed a lot of rallies, but I also contend that Bitcoin has been the better place to be, and it will still likely continue to be the better place to be, even through the early stages of the next bull market.
Ben, at the beginning of this year, Alf and I put out a 2023 predictions episode, which had not just price stuff. It had to do with the industry, a lot of different things. But we didn't necessarily agree on everything. And we had a bet, a little friendly wager, that on December 31st, 2023, if the price of Bitcoin was 29,000 USD, Alf took the over and I took the under. If you had to side with one of us on that bet, who would you side with?
I think I'm going to say it's going to be below that by the end of the year.
All right.
I like my odds, Alf. That
means you're going to owe me a beer too if I win.
Hey, I'm fine to do that. And the thing is, like, I can put out this opinion and I can still be happy if it's not. But I will say, I do think regardless, by the end of the year, you're still likely looking at Bitcoin in an uptrend. Like, so like, even if say like the lows are not in, or even if we have to go back down, I think we're likely going to see that before December. So, technically there's always a chance where like we don't get, we're not back to 29K by the end of the year, but we're at least, we can see the path to it, and you could argue we could see the path now. I mean, it's not that much higher. So maybe that's another question is like, there's always a chance we hit 29K, but we're not at 29K by the end of the year. Like maybe we hit it in the next month. But then we come back down and go back to 20K for a while and then slowly turn back up. I'm going to say it's more likely. I would put the probabilities on it. I would say maybe like a 70% probability we're going to be below 29K. And a 30% chance that we could be above it is my best guess. And the main reason I say that is more so because of a recession risk. That's the main reason.
In terms of, I've heard you use this quote before, and I think it's such a good one in the sense of bull markets make you money and bear markets make you rich. And so for somebody listening to this, I mean, you've gone through kind of all of the charts and everything along those lines, but kind of what's the single best piece of advice you could give for somebody who maybe got in during the previous bull run? They've got, they've been scared away a little bit, but in terms of taking advantage of the situation we're in right now, what's the single piece of advice?
Just stay with it. I mean, like I have a ton of indicators on my website. I mean, thousands of charts, but the secret is, I mean, the real secret is you don't need 1,000 charts to do well in crypto. You just have to stick around. That's the secret. Just stick around and you're likely going to do well. I mean, I can sit up here and talk about all the reasons why we might go down, talk about the downside risk, but we also know that, and I say this as someone being self-aware, right? Like pessimists sound smart, optimists get rich is the truth. I mean, the markets generally trend up with time, and the longer we go if you only ever listen to the bears, you would never make money, is the truth. Because even if you did risky stuff like short the market, most people, even if the market goes down, you're still going to lose money shorting it because it's probably going to pump before it goes down, right? Mm-hmm. So I would say just stick with it. Focus on the blue chips first. Like there's no sense, in my opinion, in focusing on getting like super large positions in the altcoin market if you don't already have one in Bitcoin and ETH. Because if we have another bull market, which I think we will, Bitcoin and Ethereum, I think, will be there for sure. There's a lot of altcoins that won't. A lot of altcoins in 2013 did not put in new highs in 2017. A lot of altcoins that put in highs in 2017 did not put in new highs in 2021. Some of them did, but some of them didn't, where they went up to the prior high. So I would say it's first important to secure positions in the two larger, the blue chips, Bitcoin and ETH, and just to stick with those. And beyond that, like once you feel like you have a comfortable position in those, you could expand out to the altcoin market. And right now I'm just in the stage of basically just being Bitcoin heavy for crypto. And I think some people might scratch their heads and they might say, well, if Ben's pointing out the downside risk and saying that we could go back down to the lows eventually, like, does that mean he has no Bitcoin? Like, and that's a disconnect. I think like you can have like an academic reason to think we could go back down, but you're still going to hedge, right? You're still going to have a position in Bitcoin. Like you're not just going to sit here and say it has to go down, because what happens if tomorrow we have a complete meltdown in the financial systems and the Fed pivots 6 months before people think they're going to? It's not the most likely outcome, but it's an outcome. Yeah. And so you have to be hedged. So I would say like the secret to the Cryptoverse is honestly just sticking around and not losing so much sleep as to whether the bottom is in or not. Think about it. Everyone worried about whether 17.5 was the bottom. I didn't think it was, and it wasn't. The people who bought at 17.5 or at 20K are still doing well right now. So you could even argue the same thing. Like even if we go lower, we're still likely just going to recover and come back up eventually. We just kick the can down the road. So I would say the secret is just time. It's nothing more than that, and that's why I say time is on our side. It's not any more complicated than that. And I think the people that do the best are honestly the people that just ignore a lot of the narratives, and then just say, you know what, I'm just going to accumulate, on a weekly basis or a monthly basis from now until the next halving, and we'll see who's laughing at the end. I think probably the best strategy, and just sort of ignore everything else between now and then.
We've talked a lot about like looking at the charts and going through sort of like where we are and what's maybe to come over the next year. But if we look at sort of like a more macro picture and we take all cycles into account, you've talked before about the law of diminishing returns, and and potential like lengthening cycle theory. Whether or not that's happening, I wanted to point out and get your thoughts on, for example, where the last cycle peaked. You mentioned you were selling off when the risk was getting high. But if you look at it just looking at the charts, just visually, I mean, we didn't have like a blow off top, really. I don't think a lot of people would call it the blow off top that we've seen in prior cycles. And then the fact that it came back as it did and put in a higher top in that sort of second peak of this run, I think it took a lot of people by surprise, and it didn't really play out the way, again, like you said, it didn't follow the narratives that were happening at the time around 100K and even as crazy as 300K. So what does this mean for the future when we look at it at a grander, more macro perspective? Are we going to see less blow off tops, and is it going to potentially lengthen out, and are we not going to get the same returns we were getting? What are your thoughts on all that?
Yeah, that's a good question. So last cycle, I was under the impression that we would see two things: diminishing returns and a lengthened cycle. And that was one of the reasons why I was caught off guard by the first parabolic rally. I mean, like, I was fully positioned for it. I mean, I had all tons of crypto, and I actually got wrecked in 2018 because I was accumulating back in the summer, and then we watched everything drop 50%. And on altcoins dropped another 80% from there. So I had been accumulating, since late 2018, and I was under the impression that the cycle would go on for a longer period of time, and I was under the impression it would be a double peak cycle. Actually, we talked about this back in in March and April 2021, and why I was selling off my crypto was because I thought we were at the top of the first peak, and we were, and I was right about that. And then in the summer, I was like, all right, this is the chance to accumulate for the second peak. That's likely going to come in 2022 or maybe even later. Was kind of where I was thinking at the time. But I was also under the impression we would see diminishing returns. So I wasn't thinking we were going to go to 300K, but I thought we could make it to 100K. I did think that was possible. And so what happened? We got to I accumulated again in the summer because I thought we were going to go back up to a new peak, and we did, but it died before it really got going, and that was what caught me off guard. And I was like, every cycle kind of has to be different because it has to throw the people from the prior cycles off guard a little bit, it has to, because we can't all just sit here and buy the bottom and sell the top every single time, right? Like, someone's got to get wrecked. I mean, to some degree, it's a zero-sum game. So I think we will likely continue to see diminishing returns, is my opinion. The cycle length, I think, is less important to me now as it was back then. I think we have to be more reactive. As annoying as it is, I think we just have to be more reactive to what the Federal Reserve is doing. I mean, they essentially dictate market cycles. I mean, when we're in QE, markets go up. When it's QT, markets go down. And that's why they say don't fight the Fed. Don't fight the Fed. And a lot of people are fighting the Fed right now, but arguably one of the reasons that we've seen that is because China reopening, they're injecting a lot of liquidity in the system. Japan as well. And we have the debt ceiling issues that have led to more liquidity going back in the system. But in the end, I think you actually need to see, you ultimately need to see that pivot. I would say. I'm trying to think, what was the question again? I think I've gotten off track.
Just like
here.
General thoughts on
the cycle,
macro.
Yeah,
cycles,
so I think we're likely going to see diminishing returns again. I don't think it has to lengthen. I mean, it could, but I don't think it has to. And as measured from the halving last cycle, it did lengthen. by about 2 or 3 months, just like it had from the halving before that one. So maybe that'll happen, where as measured from the halving, it could. But also remember, the halving occurs earlier and earlier in the year. So, this time the halving is going to be coming fairly early on in 2024. So if the peak is in the end of 2025 again, it's going to be about the same, be about the same time frame. And so I think the length doesn't matter necessarily. I think what we'd have to look for is are things like, is inflation returning? Because if you look at the 70s, we put in higher highs, but then inflation came back and we just went down and put in a lower low. So what I would like to see, honestly, if I'm just being I completely honest, I would like to see the Fed get inflation under control now, as even though it's going to be painful. I would like to see them get it under control now, because the alternative is something like the 70s, where we basically just put in higher highs and lower lows for a decade, and the price just go. Essentially, our returns for the next decade are at zero for long-term people. For swing traders, they love it because they can just trade the range. But for people that are trying to just build up a portfolio to trend higher with time, if you get a decade of high inflation, it's not good. So what I think we'll see diminishing returns again. So, I don't think that the Bitcoin will go up as much as it did last cycle. Last cycle, as measured from the low, let's just say, the low was around $3,000. So, it went up, like a little over 20x, 20 something, it did a pretty good job. This cycle, it probably won't be that much. Ethereum itself went up 50x from its bottom. And that was when I was bullish on ETH. I was very bullish on ETH at $100. And now, I'm on the record. I've been bearish on the Ethereum Bitcoin valuation for like a year now. And I don't really think Ethereum, I think Bitcoin makes more sense at this moment. And we sort of see the comments of like, oh, well, Ethereum's up. But the thing is, for the last year, Ethereum has been in a range and it hasn't really gone anywhere. It's not been a 50x rally, but it also hasn't been like a 50, like an 80% dump either. So I think you're likely just going to see continued consolidation for the rest of this year. Some coins I do think will put in lower prices, and then next year we'll trend higher in a more sustained way. Continue on in 2025. Likely see some type of top, and then perhaps another bear market. It hasn't broken yet, right? 2014, 2018, 2022. Let's put on our bear market caps for 2026, unless there's a really compelling reason not to be. I suppose the reason not to be bearish in 2026 would be like if all of 2023 is bearish and if we're still bearish in 2024 and the market finally turns around in 2025, then I don't know that it would make sense to flip bearish in 2026. But if this year is just kind of like a sideways year and then we slowly trend up, if it's not broken, don't fix it, right? If it if it's just diminishing returns is likely going to be a thing. And it's sort of just the reality of it. And you could argue, if you want to draw the comparison to the .com crash, like if we're unable to put in a higher price than 69K, which is there's a chance that happens. I would like to be more optimistic and say we will put in a new high, just because it's fun. It's fun, like just sort of like going into that and the hype that comes with it. So that's probably what I'm hoping for the most. But if we don't put in a higher high and we just put in a slightly lower high, then it might just follow the NASDAQ, and where the NASDAQ put in a lower high during its next cycle, but then it also put in a higher low. So meaning whatever the low is this time, whether it's 15.4 or whether we go lower, that would mean the next cycle should be a higher low if it's a lower high. And then on the next cycle, we would, look at what happened. The NASDAQ went up for like 10 years straight after that. After it broke through. So it might just take a bit more time to get there. But I still think Bitcoin will continue trending higher. And eventually, I think we'll actually break this diminishing returns. Like if something like that were to happen, where we don't put in a higher high and it's a lower high, and then the next cycle we kind of just get up to it, I think we would eventually break it and then just go into sort of like a crypto renaissance where, like we do something like the NASDAQ where we just get into another decade-long bull market. But that could be a little ways off.
Ben, this has been such a great conversation, such a great episode. As I mentioned at the top of it, I mean, nobody really knows what's going to happen, but I think, you know, if I was a betting person, you're as good as anybody in terms of having an idea of at least looking at the charts and making some sense of it. We like to end every episode of Show Me the Crypto with the same 3 questions we ask every single guest. It's a segment we call You Had Me at Crypto. Ulf is going to ask you those 3 rapid fire questions.
All right, Ben, you ready for this?
Sure. I don't know what they are, but go ahead.
All right. The first question, who's your favorite person to follow in the crypto space?
Who's my favorite person to follow? I mean, some are more interesting than others. And I would say there's probably reasons I follow some over reasons I follow others. But some are more, a little bit more flashy, I think. I don't know. This is a tough question to just pick one person. See, some of them are just not as interesting. Like I like following people like Adam Back just because he's like a crypto OG. But it's not like that's sort of the analysis that people are, a lot of people aren't like looking at that as like, super flashy. He's just like a crypto OG. I think that stuff is interesting. I also like following, people like Vitalik just because I think the development of Ethereum is very, very interesting. So I think I'll just leave it at that. There's no one other specific person I think that I follow more than others. And again, some of the reasons I follow some people aren't necessarily because I like the content they put out. I mean, there's when you look at like the meltdown of FTX, I was following Sam quite closely during that phase, but it's not because I was super interested in what he had to say, but it was just kind of watching the meltdown occur.
Yeah. All right. I love it. We've actually had Vitalik a lot. He might be the top pick. So definitely.
Just for the record, I said a Bitcoin person before Vitalik.
Yeah, that's true. That is true. All right. Second question. What will the price of Bitcoin be 10 years from now? We're going a decade out.
10 years from now. Okay. So, I'm of the opinion that Bitcoin will get to 1 million by like 20. It's one of the first videos I have on my channel. So if people haven't watched it, they should watch it. I think it'll hit 1 million, probably further out than you think I'm going to say, but I think by like 2040 is when I think Bitcoin will get to 1 million. So like, 18 or 17 years from now or so. I think within a decade, so 2033, so even if we were to take the more pessimistic approach and say it follows the NASDAQ, which doesn't have to, but if we take the more pessimistic approach, I would say in 10 years, I would say maybe 2 or 300,000. That's what I would say probably. So in 2033, because we'd have the 2025 or the 2024 halving, the 2028 halving, and we'd also have the 2032 halving as well. And surely we'll be at periods of more loose monetary policy. Remember, one of the reasons, look at Bitcoin divided by M1. It's just gone sideways for like the last 7 or 8 years. So as painful as it is for us, one of the reasons asset prices go up is just because the Fed prints money, and everything's just inflated. And same thing with the S&P 500, by the way. If you divide it by M1, it's just gone sideways for decades. So I would say, by 2033, I think we're probably going to be at, let's say 300K. Let's say 300K by 2033. And then by 2041, I think is where we'll be around 1 million.
Love it. All right. Third question. What's the most underrated project in the crypto space?
The most underrated? There's a different way I can answer this question. My gut tells me Bitcoin, just because the dominance is so low and no one else seems to agree with me. Beyond that, though, I would. Ethereum, I guess. Ethereum is sort of the backbone to most of the cryptoverse. I don't see how. Imagine if Ethereum didn't exist. Crypto would seem so different. Totally. Most everything we do is on Ethereum. Yes, people do other stuff on some of the other chains like Polkadot, Cardano, Solana, Avalanche, but Ethereum is the backbone. And I would argue that Ethereum is overvalued with respect to Bitcoin, but over the macro scale, I think it's still undervalued with respect to the rest, the altcoin market. I think altcoins are overvalued against Ethereum and Bitcoin, but I also think they're more or less just perpetually overvalued against them. I even have on my website, I have a page called "Does It Bleed?" and the default is just comparing every crypto to Ethereum, and you can see that almost every time scale, most altcoins bleed back to Bitcoin and they bleed back to Ethereum. So, I mean, I know it's not a flashy answer and it's probably not the one you're looking for, but
no, actually it is, because they are the two biggest. Most people don't call them the most underrated. I like it. Yeah.
Well, I mean, look at 2013. The altcoins that were around then, most of them are gone today, right? So if you had said any of them are undervalued, and you had a reality check today, like they don't even exist anymore. You had MadeSafe Coin, WorldCoin, BBQ Coin. BBQ Coin was number 11 in late 2013. Who here even knows what that is?
Never heard of it.
Yeah. Well, and look at 2017. You had a lot of cryptocurrencies in the top 10 that are not there today. EOS, I mean, one of the biggest raises of capital in the Cryptoverse we saw. You have a lot of projects that it would have been easy for people to call them undervalued after they lost a lot of their valuation, but they just sort of wither away into the Cryptoverse, never to be heard of again. So never to be heard from again. So I would say Bitcoin and Ethereum are going to be undervalued, and as they say, a rising tide lifts all boats. If they go up, they can lead to the altcoin market going up. But it doesn't change the fact that most altcoins are bleeding back to Bitcoin and back to Ethereum over the macro scale.
Ben, this has been such a treat. Thank you so much for joining Alf and I on our 100th episode of Show Me the Crypto.
Thanks for having me. And again, if you're here from my channel, make sure you subscribe. It's always good to help. When you start off a channel and you're a smaller channel, it's hard to get that traction going. So make sure you guys subscribe to these guys, show them the support, and hopefully we'll see you guys blowing up here in the next bull run.
Let's hope so.
Fingers crossed. Thanks, Ben.
Thank you for listening to Show Me the Crypto. Please make sure to subscribe as well as rate and review this podcast.